Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. So in today's markets, guys, we had a CPI report come in on the morning, and it was hotter than expected. However, Wall Street didn't seem to care. Take a look at the gains on the day, guys. SPY up 1.08%. QQQ almost 1.5%, and pretty much everything green except for your Russell. The Russell reacting definitely to hotter than expected inflation results, which just leads once again the Federal Reserve to be able to cut rates a bit later than expected. Now pretty much the expectation is definitely for either June or July, which still leaves about 2 or 3 rate cuts on the table for 2024. So not as much as we were expecting earlier on in the year, but rates still will be coming down. That being said, guys, in today's video, we're going to go over that CPI report and see why, even though it came in hotter than expected, it's actually not that bad in my opinion. Then second, we have a subscriber request, which we'll do right after the CPI data that we're covering here. Steve asking, can I do BIDU and Pinduoduo? So those two Chinese stocks, I will definitely be able to do for you, Steve. I will also compare them with my favorite play, which is Alibaba. So we will see how those 3 plays compare within amongst each other rather. And then of course, after that, we're going to do our technical analysis rundown in terms of our major indexes and then dive into our big tech names. So a little bit of a shorter video here on the day today. No earnings for the day, guys. Not much in terms of earnings after the bell or even on the morning that really, would be pertinent for today's video. Tomorrow, however, we do have a couple that I may want to look into here. Dollar Tree, Sentinel One, and Lennar are going to be the considerations for tomorrow. Then on Thursday, we have Dollar General, Adobe, and Ulta Beauty. So potentially I may be doing 2 on Friday. There is 3 that I want to cover tomorrow. So we may do either Sentinel One, Lennar, maybe on Friday. And then on Friday as well, we may just do Ulta Beauty on the Friday session after the close. But for the most part, guys, earnings season is quite wrapping up here in a very beautiful fashion. It's been a great earnings season so far, guys. As I showed pretty much about 2 Fridays ago when I recapped the entire earnings season from some data that we saw from FactSet. All in all, guys, earnings are going up, EPS is going up, companies are boosting revenue as well. There's really only a few sectors that are currently being left behind in the market, and those are all interest rate sensitive sectors. Think of EV plays, think of real estate plays, utilities plays, and companies that may have a lot of debt. So solar companies as well have been hit by that. So we really see a divergence in the market right now between those interest rate sensitive stocks and all the other companies that are not sensitive to interest rates. So with all that being said here, guys, let's get into a little bit of data for the day on the course in terms of the heat map rather. So you can see here that most of your outperformance was once again in big tech, Meta having a beautiful day, Microsoft, Oracle, and Adobe leading to the upside too. And semiconductors just continue their outperformance. NVIDIA with another 7% day here, guys, up almost to about $920. Even Amazon getting some love, 2% to the upside. And the bottom half of the market, very healthy rotation, guys. Financials and healthcare, still healthy rotation. Nothing to say bad about that. On the one-day relative performance, you can see that most of everything is in the green, except for interest rate sensitive sectors, such as utilities, real estate, and a little bit of basic materials. That's just normal, guys. These are a function of your hotter than expected CPI reports, which translates into rates coming down a little bit later than expected. So all that being said, guys, let's take a look at exactly what happened with the CPI report this morning. This was a very mixed report, but on the headline figures, everything did come in hotter than expected. Month over month, you can see we were expecting 0.3, came in at 0.4, hotter than expected. Your core was supposed to be coming in at 3.7, came in at 3.8, still lower than the January number, but higher than the expectations. And on terms of the year over year comparisons, we were supposed to be sitting at 3.1 was the consensus, came in at about 3.2. So everything hotter than expected, month over month, core, and your general overall CPI. Now, that is not as bad as it may seem as a headline number here, guys. We're going to take a quick little look into the breakdown of what exactly went up and what exactly went down. So here is all of the line items for your CPI. We're not going to go through each one, guys, but as long as you see a number over 0.2 on a month over month basis, it's not that good. So let's take a look. What were the major contributors here to your month over month gains? Well, we have some return of energy inflation right here, 2.3%. However, take a look out on the yearly, and I'll show you these all on a graph as well, just to illustrate how far they've come down. On a month over month basis, we came up, but on a year-over-year basis, we're still down about 2%. And such things do continue, right? So gasoline as well, major contributor, right? 3.8% to the upside in terms of month over month. As a whole, 12 months trailing though, 3.9% to the downside. Here we have utility pipe gas service as well, 2.3%, big energy read, but as a whole, down almost 9% trailing 12 months. And that just continues, guys, even though we have a few little rebounds here, such as apparel, 0.6% to the upside, you can see trailing 12 months is actually flat. A lot of things, everything except for your shelter. We've talked about this time and time again on the channel, guys. Services are the sticky portion of inflation. Goods inflation is largely all gone out of the market right now. Now the one thing we're waiting for is shelter. It's known to be a lagging indicator, and the expectation is that in the second half of this year, shelter will be coming down as well. So that is when the real declines in inflation from our current roughly 3% down towards the Fed's target of 2% will really be happening. I personally believe it's only when shelter costs are going to come significantly down when that is going to be the point where we really start to get that reduction in inflation. So here's your graph in terms of the CPI. You can see here that we came in about 3.2, which is roughly on par with every single number pretty much we've been getting since July, right? This is really the average that we've kind of been stuck at. The lower 3% bound is as best as we can do. However, if we take a look at this, guys, on the lined items, you'll see that a lot of these things, they're coming down significantly. Take a look at food at home, right? Peaking 13.5% on a year-over-year basis. We're now only down to about 1%. So this is really back to pretty much pre-pandemic levels. That's for food at home. Take a look at energy as well. Energy prices, even though we ticked up ever so slightly in February, we're still negative, guys, on a year-over-year basis. So deflation in most of your energy. Take a look at gasoline, same thing. Even though we had a little bit of an uptick here in the February month, it's still negative on a trailing 12-month basis. Right? So all of that, and even in shelter, guys, shelter, which is one of your stickiest items, right? Peaked at about 8.2% last March. Now a year later, still sticky, 5.7%, but you can see the clear trend, which is coming down. And here's the kicker, guys, the new vehicles, right? New vehicles were one of your worst contributors to inflation last year. Now look at new vehicles, 0.7% year-over-year inflation, well below the 2% per year target, right? So a lot of things, guys, are coming down. Your services as a whole, keep in mind that shelter represents most of this services number right here. Services still being a little bit sticky, 5.2%. So with all that being said, guys, goods inflation, as you saw pretty much in this chart and in your data plots right here, you know, all the items in terms of your goods are coming decently down. And that's just reiterated, guys, when we take a look at our, I love this chart by Yahoo. I show it to you guys every single month, where inflation is and isn't. Take a look, guys. A big portion of this month's read was auto insurance. So everybody knows that auto insurance providers increase their prices at the beginning of the year, January and February, and then they don't do further increases for the remainder of the year. So this is a large portion of this read. Take a look. However, your overall inflation right now is about 3.2%. There's only a few items that remain sticky above it. Rent, we've talked about, is sticky. Restaurant meals, still slightly elevated, 4.5%. Housing as well ties into that housing and rental market too, right? 4.5%. Earnings, 4.3%. Personal care items, 4.2%. But look at everything that is now below and trending towards 2% target, right? Transportation is down. Pet and pet products is down to 1.7%. Those were sticky above 4% for a while. They're finally down. College tuition, medical care, groceries down, new vehicles, we talked about that. Clothing, now finally flat, very good. But look at this, hotel rooms, electronics, used vehicles, school books and supplies, furniture, gasoline, appliances, airfare, toys, rental cars, all in a deflationary cycle right now. This is very good. If you want some perspective on this, this is your most recent February read. Take a look at what we had July of last year when we roughly had these same month-over-month comparisons, right? So in July of 2023, so when we got the June reading for inflation, overall inflation was 3%. But take a look how many categories were above your 3% overall inflation read right here. Quite a few. Compare that to right now, guys, and you can see the stark contrast between last year when we had overall inflation of 3% and this most recent read when the read overall inflation was slightly higher. But take a look how many more items now are trending either below or towards our 2% target. It's a very stark contrast. It just goes to show you there is only a few remaining sticky elements in your inflation data right now, and most of that has to do with housing, and housing prices and rental prices will be streamlined to the downside in the second half of the year. So in terms of this inflation report, guys, I am extremely pleased. Yes, it's still sticky around the 3% mark. However, the fact that most of your major categories are now either in a deflationary cycle or at least trending towards the 2% target, it is a very good thing. And that is no more evident, guys, that when you take a look at the inflation read from back June and July, you can see how much better we've gotten as a whole. So hopefully that was insightful, guys, for your CPI data today. Now let's get right into our subscriber request, which is going to be covering BIDU and Pinduoduo. Okay, no problem at all. So let's go over PDD first. So I did a breakdown, guys, of all of these companies. All these companies pretty much, except for Pinduoduo, are all crushed at their all-time lows. So if we're going to compare Baba, you guys know this one, right? Crushed back to 2016 lows right here. Pinduoduo is faring, better than others because they have more growth, very high revenue, very high EPS growth. And the other one, guys, is going to be BIDU, right? So the BIDU as well, their stock price is currently still absolutely crushed, about $105. You could get these prices, 2022, 2020, but before that, you would have to go pretty much back all the way to 2013. So their share price is crushed as well. So let's start it off with BIDU, and then we're going to go through Pinduoduo and compare them to my favorite Alibaba. So BIDU, very solid company. If you don't know what they do, guys, they are pretty much, for lack of better terms, they are the Google of China. Most of their business is their search engine business. They almost have a monopoly in China. I think their search engine is used by 76 to about 80% of the general population, and they have a lot of cloud infrastructure as well. So if I had to compare them to any American company, guys, I would compare them most closely to Google. Obviously, they don't have the market cap size and the international exposure that Google does. But in terms of their business model, what they do in their lines of business, it all ties into what Google does. Think search engines, think advertising, think cloud businesses, okay? So that being said, very decent numbers for BIDU. Revenue growth of about 7.5% per year. EPS growth of about 10% per year, which is good as well. They have about $12 billion in debt. They do have about $5 billion in cash. So still not that bad, guys. Not too much debt in relation to their cash. I'll give them that. However, Pinduoduo and Alibaba have better metrics in terms of their balance sheet. In terms of their free cash flow yield, so how much free cash flow do they bring in on a yearly basis in relation to their market cap? This is substantial, guys. 14% is absolutely amazing. Usually, you want to have a good free cash flow ratio, like an amazing free cash flow ratio, would be between 4 and 5%. That would be a very solid company that you're able to find on a dip in terms of share price. Free cash flow yield of 14%, guys, for a profitable, solid company, it's almost unheard of. The only ones that have this nowadays, guys, are pretty much Chinese stocks like these. And other growth stocks that we're not going to cover on the channel right here, but much smaller companies. Out of the large companies that have somewhat of a global presence with market caps between, anywhere between 30 to $100 billion, excessively tough to find any other companies with such high free cash flow yields. In terms of buybacks, do they do buybacks? Yes, they have about $5 billion outstanding in buybacks that they can do through 2025, which is about 14% of the market cap in just the next 2 years. That is absolutely outstanding. So you love to see that in terms of BIDU. In terms of their valuation here, guys, their forward 2024 PE at $105, which is the current share price right now, it's about a 9.5. Very low considering this growth. And when we take in consideration their PE ratio as an expression of their growth, you call that the PEG ratio for 2024 on a forward basis. It's about a 0.95. Anything under 1 is very good. So to see them at 0.95 is very good as well. So this company, guys, there is nothing wrong with the growth of this company. It's just being plagued by the same thing that the rest of the Chinese market is being plagued by, and that is relative consumer slowdown in terms of discretionary spending. Now, it shouldn't be affecting this company because this company, is not so much consumer facing. It has a lot to do with advertising and business to business plays. But you guys know when consumers are making less money, when companies are making less money, they tend to spend a little bit less on advertising. So it has been hurting them a little bit, but still Even despite that little slowdown, guys, still growing revenues healthily, still growing EPS healthily. So this one, guys, in terms of evaluation, it's excessively cheap. And as I said, on a technical basis as well, guys, right? We are at major support levels, the same thing as Alibaba. So if we're buying down here, 105 all the way down to $90, in my opinion, guys, it is a no-brainer. Obviously, your short-term bears are still in control, just as the rest with the Chinese stocks, right? So current weekly downtrend right now. Eventually, when the Chinese market recovers, we should expect some very healthy share appreciation. In terms of the price targets for this one, guys, I mean, we can just take a look at the analyst price targets as a whole. I would put a price target about $150. Most analysts, guys, are all extremely bullish here. Price targets ranging, from the midpoint to the high end, $156 all the way up to $240. My conservative price target for this one would at least be able to touch this previous resistance line right here of about $150. That should be relatively easy for the stock to do. So I like BIDU. Nothing bad to say about the company, just overall bearish because of the Chinese market. This recovery in the Chinese market, when it does happen, I believe BIDU, Pinduoduo, and Baba are going to absolutely fly. Now let's move into Pinduoduo. Pinduoduo, their stock has been doing relatively better than the rest, right? At least this one is in a monthly uptrend. If we take a look at Alibaba, you can see that Alibaba continuous monthly downtrend at this point, and the previous one that we went over as well, right? In terms of BIDU also in a slight monthly downtrend. Now, Pinduoduo has been doing a better job than Baba and BIDU in terms of keeping up their share price, and that is really down to the amount more of growth that they have. So this company is growing excessively fast, almost twice as fast than the other two names. So revenue growth about 22% per year, EPS growth fantastic 25% per year through 2027. Now this company, what they do, guys, they're a direct competitor to Alibaba. They do exactly the same thing, e-commerce, but with a focus on lower income individuals. So if you guys thought that the products on Alibaba were cheap, well, Pinduoduo's products are even cheaper, if you can imagine that. So coming in really, really good. And they have more consistent net margins versus Baba and BIDU as a whole. Take a look at these net margins here, guys, right? In the past couple of quarters, net margins usually between 20 and 25%. And in the past 2 years, still the same, guys, as they've now grown to scale, roughly the same between 20, 25%. Alibaba's margins are slightly worse coming in the last couple of quarters here, guys, right? You can see it fluctuates, but usually anywhere between, let's call it about 8 to roughly 15%. So they do have better margins than Alibaba. And in terms of BIDU, right? BIDU's net margins in the past couple of quarters, we can say that they average anywhere between 9 and roughly 15% as well. And on a yearly basis, that tends to be the average. So really, Pinduoduo has better net margins than all of those two other companies, right? In terms of cash versus debt, their balance sheet is extremely healthy, guys. $15 billion of cash on the balance sheet, only $2.7 billion worth of debt. So very, very good cash position here for the company. Free cash flow yield is lower than BIDU and Alibaba, but at 8%, it's still better than 98% of stocks in the entire stock market right now. So very, very good free cash flow yield at 8%. They don't do any buybacks, however. Now, they generate a decent amount of free cash flow, but they're choosing to reinvest that into the growth of the business rather than paying back shareholders. So the company doesn't pay a dividend, and they also don't buy back any shares as of yet. So that's just one negative. Baba and BIDU, they do significant buybacks. Now, in terms of your valuation here, so your forward 2024 PE at $119, which is roughly a share price right now, is about a 15.76. Not bad. Not as good on an only PE basis as Baba. Let's say Baba on a forward PE basis is only trading about a 9. And BIDU, in that respect, as you guys just saw, BIDU is also only trading at roughly a 9. Pinduoduo trading slightly higher, but they do have higher growth. So when we take this PEG ratio, this is why I love the PEG ratio, guys, because we can compare different companies amongst each other using a common denominator, and that is the PEG ratio here. So if we divide their forward PE by their EPS growth of 25% per year, it gives us a PEG ratio of 0.63. This is absolutely amazing. It's better than BIDU at 0.9, and it's right in line with Alibaba that we're going to pull up at about 0.64. So Pinduoduo also representing an amazing opportunity. I understand it's run significantly off the lows, but even at these share prices, guys, considering the fact that we are in a technical monthly uptrend, we're bouncing nicely from our monthly 12 EMA, and we just literally did the breakout retest of our previous support zone. This could be a very juicy opportunity to be buying the dips. In terms of your analyst price target upside here, All analysts on this stock are bullish as well. Price targets range between $136 and $226. The midpoint roughly about $175. So you'll notice a common theme, guys, on all of these three stocks. Even if I pull up Alibaba, most, if not all, analysts are extremely bullish on your upside potential for these companies because they're just so cheap. The amount of money that they bring in, their margins, and their growth perspectives for the futures are just absolutely amazing. There's no reason for these stocks to be crushed this much other than the underlying Chinese economy, which is absolutely normal. But it just goes to show you guys that even if the Chinese economy is slowing right now, these companies have no problem pumping out very, very good growth for the next couple of years. And their cash versus debt positions are just really not that bad. They're set up perfectly to weather the storm that the Chinese economy is throwing at them right now. So Pinduoduo, another name at a very attractive valuation, currently at a very attractive technical location, right? So this one is attractive because it's a breakout retest of the range and run. Would see no problem with this one being able to run. The other ones in terms of BIDU and Alibaba, they're just attractive because they're pretty much down to time machine prices, right? Those are the differences on the technicals between those three stocks, right? Baba as well, just down to time machine 2015, 2016 prices. So if we compare those two guys to Alibaba, take a look at some of Alibaba's numbers, and all three of these companies are great. But I like Alibaba the best because of one single thing. Now, in terms of the revenue through 2027, here's Alibaba, 7% growth per year, fairly decent. EPS growth through 2027, about 14% per year. That's very good. Cash on hand, take a look at this, guys. $42 billion in cash on hand, only $23 billion worth of debt. So 2-to-1 cash to debt. That is very, very good. Free cash flow yield, 13%, which is absolutely amazing. You can put that on the same line pretty much as your, not Pinduoduo, but BIDU. So BIDU also has an amazing free cash flow yield. So nothing to say there. Very good for Baba. In terms of buybacks, look at the size of the buybacks here, guys. $35.3 billion in buybacks outstanding, which is 18.6% of the float. That is even more currently than Baidu is currently doing at about 14%, right? So Baba wins in terms of your buybacks. They're also a winner in terms of a high free cash flow yield. Now, take a look at their valuation here, guys. Valuation forward PE for 2024, 8.9 at $76, right? Under 9 PE on the forward basis. In terms of their PEG, 0.64. So if we divide this PE ratio by their 14% EPS growth, we get a PEG ratio of about 0.64. Absolutely outstanding, guys. These companies are so darn cheap, which is why I keep playing Alibaba in these lower levels. The only reason that I prefer Alibaba over the two other companies, guys, is because of how heavy the buybacks are and how much cash they have on hand. It really dwarfs the other companies. It's not even comparable. Now, I know Alibaba makes a bit more revenue than those other companies, but still, it just goes to show you their cash position is amazing. Their free cash flow yield is amazing. The buybacks is the one that tips the scales for me, and which is why I like Alibaba as a whole. But to be honest with you guys, choosing any one of these three companies is going to yield arguably the same result, right? Some of them may rise a bit more than others, and it's going to be very tough to find which one is going to be the true winner. If I had to pick one that's going to probably be the true winner, it's going to be a tight race between Alibaba and Pinduoduo, in my opinion. Pinduoduo may see, potentially a bit less amount of gains just because of how far they are currently off their relative bottom. So in terms of the mean reversion trade, guys, Baba has a lot of room to squeeze up, right? Pinduoduo, since they've already been doing significantly better than other Chinese stocks, they're going to get a bump, of course, guys, but I do think Alibaba from the bottom is going to be able to run faster in that aspect. But any which one of these companies, guys, Baidu, Pinduoduo, Alibaba, their financials and their valuations are absolutely amazing. The companies are so cheap for what they do. As I said, the one negative catalyst that's holding them back, guys, is the overall state of the Chinese economy. If that begins to recover, which it has been, and the government has been, fighting heavily to backstop the Chinese stock market to prevent further losses and whatnot. They're very bullish on the markets. So I do believe, guys, that in the second half of the year, at the latest point, these stocks will begin to recover and recover quite quickly. In terms of which one of the three that I would personally go for, well, Baba is my personal preference, but I really am not opposed to having any one of those three stocks, guys. As I've just shown you, the financials are completely amazing. And on a technical basis, each one is very good. Alibaba and Baidu are crushed at previous all-time lows, almost pretty much, whereas Pinduoduo is doing a little bit better and already has the monthly uptrend underway. So all three stocks have significant upside in my opinion, and also in the opinion of analysts. So hopefully that was helpful in covering those three really big players in the Chinese economy. Now let's move directly into our technical analysis here on our major indexes, and we can see, guys, what a day in the markets it was. We literally only got, in the morning when the CPI report came out, a little bit hotter than expected here, guys. Take a look on your 5-minute charts, right? So here's when the report came out at 8:30, a little bit of dip, recover, and then dip into open only until 9:45. And then the rest of the day, guys, bulls pretty much taking over. So bulls just remain in full control, guys. So hard to take a short position on the market when we can't even get a daily downtrend, right? The last thing you want to be doing is trying to short, trying to pick tops without confirmation from a daily downtrend. So at the current time, guys, your bulls just remain in absolute full control. Daily higher low was set yesterday. 508.78 is your new low right there. And now at this point, guys, we're going to be going for higher highs. Target the top end of your trend line right now. 523 roughly on SPY. Nothing else to say. Your daily bulls are in full control. Your weekly bulls are obviously still in absolute full control of this market. Just not any sign that the bears are willing to take over just yet. Even a hotter than expected inflation report today was not enough to send these markets into further consolidation. So if anything, guys, the next big catalyst that we have on the horizon is going to be next Wednesday when Jerome Powell has an FOMC meeting. Now, I think, guys, that next week he is probably going to crush us. Keep in mind, every single January and February inflation report that came out either came out in line or hotter than expected. We really didn't get any bullish news in terms of overall numbers. And Jerome Powell is going to be using that. He will just continue to say higher for longer and probably won't even open the door to comment whether or not the first rate cut's going to be June or July. He'll probably just say data dependent. So at that point, guys, that could be the next big catalyst for the market. If he comes out and is extremely hawkish, which would really surprise me. There's not much in terms of, really bad news that he can use to have a really hawkish stance, but it'll probably just be more of the same. So that's what we're going to be focusing on here over the course of the next week. As a whole, though, guys, SPY, just the bulls, I mean, absolute complete control, right? Recapture the hourly uptrend. There's just really nothing fancy to see here, guys. Just a beautiful uptrend, still protecting this 12 EMA right now. So we're just going to target the top end of the trend line. And after that, we will gauge the size of the retracement to see if that is when it's going to happen leading into next week. If not, guys, we're just going to continue grinding higher. Now moving on to QQQ, same concept on QQQ, right? So yesterday we were commenting, are the bears going to potentially capture this previous yellow line resistance? They were using it as resistance a bit yesterday, and we were under our 12 EMA, this yellow moving average right here. Now, guys, as if it never happened, right? Back above it. So bulls still in a little bit of a tightening range right now. The area we still want to watch out for, guys, is a loss of 434. Loss of 434 could still set us up for a daily downtrend, but at this point, guys, not looking likely. We do have a PPI report on Thursday for producer inflation. Not expecting anything fancy or market moving in terms of that. So should just be business as usual for your market bulls at this point, guys. We are looking for the bullish penchant for the breakout right here. Top end of the trend line, guys. You're going to be wanting to target about 454, 455. And the reason that we have a bullish penchant for this one, guys, well, it's just simply because your weekly bulls are just in too much control right now to be warranting a higher technical basis sell-off. To get that sell-off, guys, as I've said, we need to first confirm the daily trend to the downside, to the bears, losing your 12 EMA and challenging the bottom end of this trend line. If we're not getting any of those, guys, we have to remain biased to the bullish side. That's just the way it goes right now. So your bulls remain in absolute full control of QQQ as well. As long as we have good rotation, guys, when big tech takes a day off, semiconductors are running. Then in the past week, we've seen a few days where semiconductors were red, but the rest of big tech was holding up. So that's why QQQ, intra QQQ rotation, extremely healthy right now. Moving on to XLF Financials. XLF Financial continuing to grind higher. Really nothing to see here as well, right? I sound kind of boring, but it's because of the market. The markets are boring right now, guys. It's just a slow grind to the upside, and bears are not able to capitalize any single red days. I've said this a bunch of times last week when we had, 1.5, 2% red days on QQQ, and the very next day, the bears are just not able to follow through. Just goes to show you the overall sentiment on the market is relatively bullish right now. Inflation, although sticky, is on a clear downtrend. Interest rates are coming down lower towards the second half of the year. The economy is healthy and the jobs market is tight. So it's just basically a very overall bullish market in terms of investor sentiment. And XLF Financial shows that as well, right? We're just in a consistent daily uptrend, respecting this 12 EMA. Nothing to see here pretty much is the moral of the story. Levels to the upside at this point, guys, we are going to be targeting upside resistance levels, pretty much your all-time high, right? 40, let's call it about 4180 is going to be the next area of resistance. And to the downside, we have to watch out for yesterday's low, which is your new higher low, 40.42. Lose 40.42. You could set up the bears for a potential daily downtrend rollover, but no sign of that now. And if we do get it, guys, just going to be looking for a very healthy weekly higher low at this point. Anything above 37, just looking for a healthy weekly higher low. And we do have a decent area of support down here, starting at about $39.50. That's going to be this yellow line right here. So keep an eye on that for financials. I love how well financials have been performing over the past 2 months. Now moving into healthcare here. So healthcare not looking too bad either. We were looking, guys, this was a beautiful tightening range by healthcare, setting the higher low, and we were looking out for the potential of the bulls to recapture this to the upside. Why? Because the bullish lean, we had that from the weekly, right? This has just been healthy weekly consolidation for the past couple of weeks as healthcare has moved sideways, and bears' inability to follow through cutting these lows just has now led to a new daily uptrend, right? Higher low and now higher high ever so slightly on the day. Nice to see daily bulls back in full control, back in the driver's seat. Recapture of your 12 EMA as well. You can see that we didn't lose this 12 EMA many times in the past 4 months. And every time we did lose it, it usually bounces back within the following day. Look at healthcare, has lost it 3 times in the past, week and a half. Every single day, the day after just recaptures the 12 EMA. Just no bear follow through whatsoever. Healthcare looking extremely good. So at this point, guys, upside targets remain 148.23, and then we're going to target 150 psychological since we're now above the all-time highs. Looking excessively bullish here. Weekly bull flag, probably going into further weekly confirmation to the upside here. So I will be targeting 150 as a potential price target. Now moving on to IWM Russell. IWM Russell, one of the only indexes down on the day, but that's because they're just so highly sensitive to changes in interest rates here. And interest rates on the day, well, they were green because the CPI came in hotter than expected, which leads us to potentially higher rates for longer, which is why you had a ever so slight uptick in yields. And obviously the Russell companies did not like that too much. Even despite that, guys, only down 0.14%, still protecting this nice little daily uptrend that we have right now. So the daily higher low is right here, 203.15. We did not cut that low. So bulls trying to play defense. The only bad thing right now, guys, is how much of this move the bears have taken back. But in relation to the size of some of these previous moves, it would not be surprising, guys, if the bulls can V-shape this in the next 2 days and potentially close this week strong. Why do I say that? Because we are currently in a beautiful weekly uptrend. Your bulls are in full control. So at this point, we were just looking out on the weekly, just looking out for a weekly higher low for further trend continuation. And we may just be getting that now with a bit of daily consolidation. I personally would like to see this come down a little bit lower. If we can come back under $200 potentially, maybe we'll get that when Jerome Powell speaks next Wednesday. Maybe we won't. But one thing's for sure, if we do pull back into this area, this is where I'm looking to buy. It's going to be a beautiful monthly breakout of the range, retest of your previous range right here, this big red support resistance area. It was resistance for a year and a half. That's what we're looking for, retest and run into later part of 2024. Most likely April at this point. I would not be too surprised. April, May could be the true liftoff days for the Russell. So the bulls playing very good defense, guys, recapturing this 12 EMA, not cutting these lows. If we do cut the lows and set the daily downtrend maybe over the next week, guys, not too big of a deal. Breakout, retest. This is where I'm looking to buy for further trend continuation. And now lastly, the Dow Jones. Dow Jones having a beautiful day, 0.61% to the upside. A lot of that was due to some Apple recovery here as well. So very nice day on the Dow Jones, 0.61% to the upside. Now, finally, the bulls back in control. New daily uptrend. So we were watching yesterday. Can the bears get further follow-through continuation, continue this daily downtrend, continue weekly consolidation? Well, the bulls today said absolutely not, recapturing a few things back above our previous resistance line, this yellow horizontal line right here. resistance, played as support, and then was acting as resistance again for the flush. Bears not able to flush. So what happens? The bulls just engulf. We're back above your 12 EMA moving average right now. We're now back above this previous resistance line, should be now acting as support. And your daily uptrend, right? Higher high, higher low, higher high is now recaptured. So now that we have our daily uptrend back in motion, we can conclude that our weekly higher lows are set. That's going to be 38,490. So at this point, guys, looking like the bulls do just want to recapture this weekly uptrend to the upside and just continue sending this Dow Jones north. So looking very, very good. The red flags would appear, guys, if we look above this line right here, break down below within the next few days of trading. That would be a little bit of a red flag, but then again, we would still just be going for a weekly consolidation. And I personally would be targeting this 12 EMA 38,200 right here for a bit more support. All in all, guys, bulls in full control of all the indexes in this market currently. So everything is looking very, very healthy, guys, as a whole. Now let's move on to our big tech names, shall we? So give me a quick second. And let's get started. So we can take a look at Apple here, guys. 0.28% to the app's upside. So Apple having a decent day, did retrace a little bit on the morning here. Right at the open, we had a very negative candle here from Apple, right? Top to bottom, 1.5% almost, and recovered all of that intraday. So your bulls are really looking good on this bounce, guys, if I do have to say so myself, right? Really no significant loss of the hourly trend at this point. Still a nice hourly trend. Right, we did get a little bit of a flush here, but bulls able to recapture that. So that being said, we are still in our daily bounce. Now, how high? Because Apple is in a daily downtrend ever since pretty much the end of the month of January, we have to be looking how high is this bounce going to get? The size of the bounce is crucial because it tells us, are the bulls healthy enough to give themselves enough space to set a daily higher low on the retracement into a new daily uptrend? That is what we're looking for. In terms of the size of the bounce at this point, hasn't really changed since yesterday, since we don't have any new highs. Still roughly about 38.2% of the move. Where I need to see this get to get confident in Apple Bulls capacity to reset the daily uptrend, we need to probably come up to at least about, well, at least 176. But at best, guys, I need to see a bounce above 177.61. If we can get back above the 618 fib level here, gives the bulls the best opportunity to set the daily higher low on a retracement and then make the new daily trend change. So far, the bounce not high enough for that. If we were to roll over immediately as of tomorrow into, let's say, a new hourly downtrend, right, and cut an end to this daily bounce, at that point, guys, we will be looking to the lows to hold as support, but the probabilities would favor a follow through for the bears. At that point, we're going to be looking 165 for the last area of support. I keep saying, guys, Apple in this area is extremely juicy. This current area, the green box right here, right, previous all-time high resistance, current support from last fall sell-off, and still acting as a bit of current support. The bears really finding it difficult to flush this share price below your 170 mark. So just keep an eye out on that for Apple, and you guys know me. As long as we stay within this green box, I will continuously play Apple very, very aggressively. And if we for some reason get out of the green box and trend lower towards 160, 155, that's when I even consider potential call options, 6 to 12 month call options. Now moving on to AMD. AMD with a very healthy recovery day today, 2.2% to the upside and even more in the after hours, so almost 3% total, looking very good. And this is exactly what we're looking for on AMD, right? So AMD had a very healthy daily uptrend. They lost the daily uptrend by cutting this low right here, but they never set the daily downtrend, right? What we're looking out for, 12 EMA was our first guide, but also we were just looking out for the, if we did lose the daily uptrend right here, what was the daily consolidation going to be? Just a very healthy weekly pullback. So who's in control here? The bulls are in absolute full control. Weekly breakout to the upside right now, and we're now trying to retest this. So even if we set a lower high and lower low into a daily downtrend, at that point, guys, it'll just be continuous weekly healthy consolidation. And if at that point, guys, we continue trending lower, target this area right here. That is going to be the top end of this previous big range of consolidation, talking about roughly 182. So even if we do get further sell-off on AMD, let's say it goes another, 5-10% lower, I do believe this area right here is where the bulls are going to put a stop to it. Previous highs of the range, and your 12 EMA is going to curl up nicely into this area as well. So beautiful area of confluence. That being said, guys, the bulls looking fairly healthy on AMD, in control of every time frame. in control of the monthly, in control of the weekly, and also now trying desperately to V-shape this as much as possible to regain control of the daily. But as I said, even if they lose it, just going to be a buying opportunity for your longer term bulls who are sitting down here in the 180 to 185 pocket. Now moving on to Amazon. Amazon also looking fairly decent on the day, 2% to the upside, and trying to put an end to this daily downtrend that we noticed on yesterday's trading, right? So we are in a bit of a daily downtrend. If we get a lower high into lower low, it'll just be continuous daily downtrend and will just be continuous weekly consolidation for Amazon. Amazon still with a decent amount of space, anything above 166, just looking for a weekly higher low for further trend continuation. And as soon as the bulls can get these short-term daily trend back, right? Well, what we're going to be looking for, guys, is a break of a big level. Need to get above this 178 level. It's the one area that really held the markets back in 2020 and 21. And then it's all the way up to your all-time highs at 188. But I say if we get a break of 177, guys, it's going to be significant. When we get that break, we are probably heading directly to your all-time highs quite quickly. So keep an eye on that for Amazon. You guys know my targets on Amazon. If for ever which reason we continue downtrending here a little bit, well, first target, 166 is where I start getting interested, in some trade opportunities. And the larger trade opportunities, if we can gap fill this earnings gap right here, guys, at 160, that's when I start to go very heavy on Amazon. But as a whole, everything looking good. Amazon's still one of my favorite plays for all of 2024. Now moving on to Google. Google up nicely, 0.5% on the day. And now Google doing a great job of recapturing this most recent sell-off by the bears here, right? So same situation as Apple, has been in a daily downtrend virtually since the end of the month of January. That being said, this is the first large attempt by the bulls pretty much since this one, right? You guys see the reason the size of the bounce is so important, right? This bounce right here was almost a 70% bounce, but you can see 70% even sometimes is not good enough, and the bears end up rolling this over. But now with a 100% bounce, guys, the probabilities that the bears can roll this over are extremely, extremely small. So we have a 100% bounce recovery right now. This overhead, these two yellow lines are previous resistance. So look at this resistance right here, acted as support for a little bit. Now that we're under them, they are currently acting as a little bit of resistance. So if we get rejected right here, what I'm going to be looking out for on Google is once we lose this upswing right here, when we come back, can the bulls set the daily higher low and get the daily uptrend going and then smash through this area of resistance in 2 steps? That is what I'm looking out for. My next trade on Google comes looking for this daily higher low. I will be going very, very aggressive. If we can see 135, 134 again, we'll be playing Google very aggressively for that daily bounce to the upside. So Google is looking very good, despite the fact that we are in a bit of a weekly downtrend right now. Right? It's still looking very good if you take a look at the higher time frames, even on the monthly here, guys, which is why I was saying you can't really see the candle, but look at this. This is the candle for March pretty much right now. And it's kind of like, I don't even know if you guys can see this, right? It's an inverse doji, very, very tiny candle formation right now. Just goes to show the monthly higher low is probably most likely set at the lows we just got, 131 here, just looking for furtherance of the monthly uptrend. So your higher time frame bulls are completely in control. And you guys know, guys, if we dip down to 130, even 125, it's such a juicy opportunity for Google. I'll continue to play this one aggressively as I have been in the last 3-4 weeks of trading. Now moving on to Meta. Meta looking very good, 3.34% recovery to the upside after yesterday's sell-off, after some Donald Trump comments, right? But Meta still having lost the daily uptrend, right? Cutting these most recent higher lows right here. So now Meta potentially, if we can't V-shape this and we get the lower high into lower low, that would be your worst case scenario. It would be a daily downtrend, would just be due for further weekly consolidation. Anything above 457, just looking for the weekly higher low on Meta right now. And I'm pretty sure, guys, just because of how solid Meta has been going and the fact that everything is going right for them, right? What we can possibly see on Meta is the fact that yesterday was, in my opinion, guys, was the most recent weekly higher low. That was the extent of your weekly consolidation. Pretty much one day to the downside. And at this point, guys, I do believe that Meta will start to attack the higher levels, talking most likely 525 and 550 at this point. Everything is looking extremely bullish for the company here, guys, right? Monthly uptrend, full control, weekly uptrend, full bullish control at this point. So I would not be surprised if we get our weekly leg higher. And now we are once again back above your daily 12 EMA, back above it in one single day of trading. So now we look to the highs, guys, 522, break of that, 525 resistance, 550 to the upside. Everything looking very good on Meta after this 1 day of recovery. Now moving on to Microsoft. Look at this recovery on Microsoft as well here, guys. Absolutely fantastic, and now approaching the top end of the price range that we highlighted yesterday. So Microsoft was having a few problems, right? Daily downtrend here. We had a second daily downtrend here. So we were kind of trapped in this range. The same thing is back here. Big area of consolidation for Microsoft. And we were saying, if for some reason the bulls today smash 409.64, we're in a new daily uptrend with some momentum to the upside, which could bring us above this range. It didn't do it today, but that's what I'm going to be looking out for tomorrow in tomorrow's trading. If we can break above 415, well, that will be daily uptrend confirmed here, break of the range to the upside. It will also be weekly trend breakout to the upside. And at that point, your upside targets, guys, remain psychological levels, talking about 425 and 450 pretty much. So looking very juicy on Microsoft after about 5-6 weeks of sideways, roughly sideways consolidation between this range right here, 416 down to about 400, which is really not that wide of a range, guys, right? Only about 4%. I do believe that Microsoft is poised to start a new weekly leg to the upside. Upside targets, once again, 425, 450, everything looking beautiful on Microsoft. Now moving on to Netflix. Netflix having a very good day here, 1.69% to the upside. Netflix really just grinding this 12 EMA. Take a look at this 12 EMA here, guys, ever since earnings, right? Just grinding higher on it ever so slightly, almost every single day. The areas to watch out for on Netflix, still the same, 593 to the downside. If we get the downside flush for any which reason, it's daily downtrend on Netflix and it's weekly consolidation on Netflix. Good thing the weekly on Netflix has so much space, anything about 550 just for a weekly higher low. And if we do start pulling back here, guys, just a quick note, again, we will be targeting our previous big Netflix higher end of the range from 2021 and 2020 here, talking about the 575 area. So that could be a very nice retest area for some further runs into 2024. Now, our upside targets, guys, still remain about 620 first target, and the second target is the all-time highs, 695. Really nothing in between those two levels. So the bulls are looking very healthy. If we get our break to the upside here, guys, break of 620, your daily uptrend simply continues. I'm more watching out for the downside here, guys. I would love if I can get a retest of 575. I'll probably be taking a little bit of a position on Netflix here in the trading account. Everything looking very good. Subscriber growth is amazing. Free cash flow is amazing. No red flags with the company. Now moving on to NVIDIA. NVIDIA, our big winner of the day, 7.16% to the upside. Sorry, guys, I had to get some coffee. So 7.16% of the upside. What were we saying yesterday about NVIDIA, guys? We were saying that even though NVIDIA has had a heck of a 2-day pullback, it's still not even, or pretty much it was about a 50%, 61.8 retracement on NVIDIA. And what did we say yesterday? In yesterday's video, we were saying if the bulls are to put together a recovery, they have to do it today, because any further move to the downside is going to give the bears a lot of space to set the lower high into lower low conversion, which could send us into weekly consolidation right away, maybe for a couple weeks in March. So obviously the bulls yesterday watched my video, did not want that to happen. So what did they do today? Came out in force, 7.16% to the upside. At this point, guys, daily bulls simply remain in full control. Your daily higher low is set right here, 841.76. Now, if we were to fail these highs and roll over, that's when it would be daily downtrend confirmed, and you would be in for a little bit of weekly consolidation at that point. So far, so good. No signs of that. The bulls can just V-shape this to all-time highs. All-time high price targets at this point, guys, $1,000 psychological level is quickly coming upon us. So keep an eye out for that. No real red flags on NVIDIA. As I said, guys, the red flags would only happen if we lose today's move and cut these lows. Yesterday's lows are crucial for short-term technical support, but everything so far looking good for NVIDIA. Now moving on to Tesla. Tesla struggling a little bit on the day. Obviously, it's a play that's sensitive to interest rates, so it was not very happy with the CPI release on the morning, but at least we were able to grind those losses back up. Take a look. As of the morning, guys, we were pretty much down 3.25% to start off the day within the first 15 minutes. Thereafter, nice to see the bulls recover a little bit. However, the sentiment on Tesla still is overall bearish. We still have not reset the hourly uptrend intraday. Still struggling right here. So I need to see a clear recapture of the hourly uptrend if we want to get any daily bounce going right now. The daily bounce right now in relation to this move right here is extremely weak here, guys. Extremely weak. Not even 38.2% of the move have they recaptured. So if for ever which reason the bears over the next couple of days recapture hourly trend to the downside, your daily bulls will be rolling over and will be heading to our lower areas of support on Tesla, which should be, talking about 170 at this point, all the way down to the lower end right here, 155. We're still battling right now. It's a real battle on Tesla between the bulls and the bears, between 170 and 180. Such a big area of support. That's why, in my opinion, guys, it's very tough for the bears to gain much ground here. We're battling not only with horizontal support, but also the down portion of this downtrending channel line, which is currently sitting at about 170, 168-ish. So that's why every time Tesla moves down into the lower 170s, it tends to attract some bids. However, guys, we are approaching pretty much the end of this negative cycle for Tesla, in my opinion. If we can get through the next 1 to 3 months here on Tesla without losing too much in terms of share price, maybe it goes down, spikes down a few times, 160, 155, but if Tesla has gone through a majority of the higher interest rate cycle so far without coming much below here, I don't believe we're going to get the full on flush and deteriorating market conditions as we did back here in late 2022. So anything, guys, what I'm saying pretty much is I really don't believe this stock is going to go much below 150, if at all, ever touches 150, right? So much of the negativity has already been priced into the stock at this point. That being said, I will continue to play this one somewhat aggressively, guys. Every time we're in the lower 170s, I'm going to be looking for short puts in the mid 160 range. Still a very good opportunity for the long term at this point, despite the company being having a relatively cyclical nature now, being highly exposed to those interest rates. Now moving on to Palantir. So Palantir looking, not looking too bad today, 2.56% to the downside. I know, but we are still in a daily uptrend right here, guys, right? So just keep an eye on these lows right here, 2241 pretty much, right? Anything above that, just looking for a daily higher low for further trend continuation. Now, I'll give the bears something. They have taken back a lot of this move, taking back almost 78% of the move. So it can set the bears up for a potential rollover of the daily, but the bulls will have something to say about it first, right? So we're looking, when the bounce happens, do they set the lower high and then roll over into lower low? If ever we do set the daily downtrend here, guys, not a big problem. Palantir has tons of space on the weekly for weekly consolidation. Anything above 22.27, just looking for a weekly higher low. And even if we do consolidate sideways here on Palantir for a while, it would not be too bad for the stock indeed. The stock has performed amazingly here over the past couple of months. That being said, upside resistance targets still remain $27.50 up to roughly $28. And I will buy this stock, guys, if it comes back down $22 to $20 in that range is where I'm interested in playing this one. So although the bulls have lost some ground over the past 3-4 days of trading, they are still in control of the daily for now, and they are still heavily in control of this weekly time frame as well. If anything, guys, any prolonged dip opportunities will be just that, dip opportunities for buying, because your longer term bulls are in absolute full control of this stock, and momentum and profitability at this stock have been going up. Now moving on to PayPal. So PayPal not looking too bad on the day, down 0.08%. Now I was expecting a bit more because PayPal is highly sensitive to interest rates, but still PayPal ending flat on the day nonetheless. So we are still trading above ever so slightly our very crucial area, guys, 60 to 57. You guys know how many times I've talked about this area in the past, and we need to maintain above it. Now, we are maintaining above it, which is good. We also have a daily uptrend trying to be in motion right now. The only problem, guys, is when the bears take back so much of a daily upswing. We've been focusing on a lot today about the size of a bounce, right? When we take back too much of a move, we could just end up getting a little bit of a tightening range. You saw that happen here. Take back too much of the move, end up in a tightening range. You saw that here. Take back too much of the move. Little bit of a tightening range here as well, same concept, right? So all that being said, PayPal is not looking too bad as long as we're within this areas. Now, it gets a little bit dicey if we break 57.80. Break 57.80 to the downside, you may have a daily downtrend, and we will be challenging the lower end of this 57 bound, which is a crucial area of weekly structure that we cannot lose. And to the upside, guys, still battling. Look, every time we try and touch this downtrending weekly channel line, this channel line is 2 years old at this point, so we know it's important. other than the media news right here, which was the shock the world headlines, right? We have not been able to successfully break and close above this trend line. So this is still the area we're getting a bit of confluence right now, right? Our support area is coming right into the downtrending channel line. And in my opinion, if the rest of the market can hold gains and the rotation remains healthy, I do think that this is going to be PayPal's chance to start breaking, closing above, setting the daily uptrend above, and moving on to a weekly move higher as well. Weekly targets for me, first target obviously going to be our most recent highs here, $67, $68. And then the next target, guys, is all the way up to $75 range. So if PayPal can get this technical breakout going here, guys, I do believe the moves into those areas will be fairly quick ones, as it'll be on everybody's radars as a technical breakout. Looking forward to that. That being said, areas to the downside to watch, guys. 57, if we trend back to that area, I will definitely be writing some puts. 57s, 55s, that is my sweet spot for the stock right now. So hopefully you guys enjoyed today's video. That was pretty much everything I had for you. If you did, consider dropping a like, would really appreciate it for the algorithm, and consider subscribing to the channel as well. We do these videos every Monday to Friday after the close, recapping your daily events. And if you have any questions, guys, whatsoever, feel free to leave them down below in the comments. Anything you like, if you want me to take a look at some specific stocks, technical analysis, an options play that you might be thinking about, anything you want, leave it down below in the comments as a question, and I'll be very happy to answer you within the first 24 hours. So have a great rest of your night, guys, and I'll see you tomorrow after the close. Peace.